We have all heard the beautiful stories of the stock market, which have been stamped by some of the wealthiest and successful traders of all time. True, you could believe everything that has been said, or you could allow us to take you through some of the things no one talks to you about. In our video today, join us as we discuss some untold stories about the dark side of the stock market. The first thing people may not have noticed about the stock market is that misinformation thrives. Some of whom have no idea how the stock market works. Bloggers and freelancers have suddenly become financial advisors writing business news sites. This unreliable information can manipulate the direction of the market and affect prices. Already, the stock market, to some extent, hinges on market opinion and the opinion of traders and investors. Any miscalculated information could significantly affect the outlook of the market. In 2013, for instance, $130 billion in stock value was wiped out following an AP tweet about an explosion that injured Barack Obama. Although stocks had plummeted due to a tweet from the hacked account, they were recovered soon enough. This goes to show how easily manipulative information can be. According to an October 27, 2013 report by the Associated Press, a reporter of the CCTV network allegedly wrote news stories with fabricated facts about Zoomlion, which resulted in widespread criticism of the company with stock prices falling on the Hong Kong Stock Exchange. The reporter was said to have received bribes from a rival company. After investigations that indicated that fake news to an extent affects stock prices, the Chinese government is looking to deal with sites and media that perpetuate false information. So, know not to believe everything you see. The stock market to the untrained eye may look like a very lucrative business opportunity, but guess what? Just because you want to make money does not guarantee that you will make returns. Anyone who gives you a guarantee that you will make profits is either inexperienced or lying to you. Due to regulations and the volatility of certain fundamentals, every investor is subject to risk and can only try to hedge or minimize the impact of these risks. And remember, there is no accountability in the stock market. Wrong perceptions could still encourage people. Greed and fear are one of the major driving forces of a market, and believe it or not, every human expresses either of these characteristics, or both at a given point in time. When the economy and businesses are thriving, people tend to become very optimistic and ignore the need for long-term strategies and fundamentals. In the exact opposite way, when the economy declines, people begin to panic, mainly if it stays that way for some time. Both factors are responsible for mispricing in the market. And while no one tells you about how these two can affect the market, they very much do so. Stock markets and businesses must be thriving or appear to be thriving to attract investors. When this does not happen, corporate leaders may falsify and manipulate earnings. Consistently increased earnings can be a significant sign that the company is doing well, and the absence of this results in a fall in their share price. Pressure is therefore mounted on these leaders to meet the expectation of the market. Failure to do so sometimes results in the manipulation of earnings. The fifth point no one echoes in the stock market is that more than 90% of people lose money all the time. The fun fact is that high-net individuals with available resources and tools are more likely to succeed in the stock market than any other person. Generally, this is not a result of unequal opportunities but the unwillingness of some traders and investors to properly research a market before making investments. They prefer to invest in companies rumored to perform well rather than make their investigations. It is important to research and make your deductions about investing in a particular market or company rather than thriving on hearsays. Remember, the more comfortable an investment feels, the more likely it is to fail. Next on this list is the herd mentality. As usual, people are more likely to gravitate where the majority or mass is moving without making the necessary inquiries. And this is no different with the stock market. Many of the worst financial crises in the stock market can be attributed to the human tendency of the herd mentality. Let us just quickly ask a question. Would you pay 1,000 rupees for a 1-liter packet of milk? This question is quite popular and has been used to explain how the stock market works. What you do not know, you cannot do, and what you do not see coming, you cannot prepare for. Most people overpay to buy an expensive stock and end up losing huge sums of money when the heat is gone. Overpaying for the purchasing of premium stocks is a real ugly truth about the stock market. Several companies are trading at a much higher valuation than their price-to-earnings ratio, even when they are not growing at a decent pace. The only time you will be ready to pay 1,000 rupees for a 1-liter packet of milk is when you do not know its real price. The same happens in the stock market. Now, as famous and successful trader Warren Buffett said, "The rear-view mirror is always clearer than the windshield of the business world." Everyone knows what happened in the past, but no one has the ability to predict the future. Not a single person knows what the market will do in the short run, and therefore it is almost impossible to determine the direction of events in a market. We have ultimately come to the end of today's video. If you enjoyed the video, remember to subscribe to this channel and click the like button. Till we come your way again, have the very best time.